Reuters. Uber priced its initial public offering on Thursday at the low end of its targeted range for a valuation of $82.4 billion, hoping its conservative approach will spare it the trading plunge suffered by rival Lyft. It is an underwhelming result for the most anticipated IPO since Facebook's market debut 7 years ago. Uber raised $8.1 billion, pricing its IPO at $45 per share, close to the bottom of the targeted $44 to $50 range. However, the IPO still represents a watershed moment for Uber, which has grown into the world's largest ride-hailing company since its start 10 years ago. The year's biggest IPO comes against a backdrop of turbulent financial markets, fueled by the trade dispute between the United States and China, as well as the plunging share price of Lyft, which is down 23% from its IPO price in late March. Uber's valuation in the IPO is almost a third less than its investment bankers predicted last year, but still above its most recent valuation of $76 billion in the private fundraising market. The IPO was oversubscribed, but Uber settled for a lower price to avoid a repeat of Lyft's IPO in late March, which price strongly then plunged in trade. Uber also wanted to accommodate big mutual funds, which unlike hedge funds put in orders for a lower price. Like Lyft, Uber will face questions going forward over how and when it expects to become profitable after losing $3 billion from operations in 2018. Ultimately, the success of Lyft's and Uber IPO's offerings will be judged based on post-IPO performance and how these companies can sustain the growth while moving toward profitability and lowering the cash burn, said Alex Castelli, managing partner at advisory firm ConResnick. Despite Uber moderating its IPO expectations, some still consider the stock overpriced. Uber is basically Lyft 2.0. Good model, growing sales. But, yet again, here comes California math once more. It is still losing a ton of money, said Brian Hamilton, a tech entrepreneur and founder of data firm SageWorks. If you buy, you are buying a bull market, not a company, he added. In meetings with potential investors the past 2 weeks, Uber's chief executive Dara Khosrowshahi argued that Uber's future was not as a ride-hailing company, but as a wide technology platform shaping logistics and transportation. The IPO pricing was a balancing act for Uber's team of underwriting banks, led by Morgan Stanley, Goldman Sachs. Uber is due to begin trading on the New York Stock Exchange on Friday under the symbol Uber, reporting by Joshua Franklin in New York, editing by Leslie Adler, Matthew Lewis and Lisa Shoemaker. Let's block ads. Why?